Hi everybody, my name is Ryan Henderson and I'm a tutor at Phoenix Financial Training in Dubai. Now this is the second question that I want to go through with you, and again from the ACCA website it is a past exam question, but it's from March-June 2017. So this is again from a previous Finance Act. So if you do have access to an exam kit, this question will be available in there, and it is called Online Limited. It is another Section C question, which is 15 marks, but this is covering the topic area corporation tax. So again, if you haven't had or got access to the question, pause the video very quickly, read through it, and then what we can then do is debrief the answers there. So I'll just scroll down the page. You can pause in between and then you can see the rest. So looking at the requirements here, the requirements are very simple. It says calculate Online Limited's taxable total profits for 13 marks. And then part B, briefly explain how the acquisition of Offline Limited will affect the calculation and payment of Online Limited's corporation tax liability in future years. So what I have done is I've written up the answer here on Excel. Again, as usual, if you're practicing Section C questions, you will use ACCA's Constructed Response Workspace. This obviously gives you a true view of how it will look in your exam. And in your exam, of course, normally the question would appear on the left-hand side, and you can move this around to see more of the question or more of your answer. Now, let's talk through this question. Now, in exams, or in the tax exam more specifically, of course, you will get a mixture of different topic areas being brought together in one question. So, for example, we've got corporation tax here. It's asking you to calculate, but of course it's bringing in other things as well. So we have operating profit, where we have to going to look at deducting or adding back some expenses. We've got leasehold property. Is it a premium that we're paying, or is it a receipt of money? We've got plant and machinery for capital allowances, QCDs, the disposal of a shareholding, and then we've got some brought forward losses and a planned acquisition. So again, with this and taxation, generally, if you know the rules, then normally you are going to be okay with this, but you have to know the rules, of course, in order to answer these questions. So calculating a liability, calculate firstly the corporation tax computation. So we know we've got trading income, we know we've got chargeable gains, we've got QCDs, and we've got losses. Now, trading income here, guys, we have to deal with the trading income starting with operating profit going all the way down to our tax adjusted trading profit there, with some things or adjustments in between. So we had a lease premium, we're going to have capital allowances. Now, like I said on the previous recording, you have to break it down into different bits. Don't try and deal with everything all in one go. Deal with the trading income first, then move on to other income or what other questions or other information they are giving you in that question there. So here you've got some capital allowances, which is quite simple. You'll add it through and then take it to your trading income. Now, you also have to calculate in this one your chargeable gain. Now, on the outset of this, it looks quite simple, but when you're trying to find the cost of the shares that are being disposed of, we then have to now put together a very detailed share pool. So this, of course, can take a bit of time in the exam, and this is something you will do in isolation, trying to find your gain figures. Work all that through and obviously calculate your chargeable gain there, and then you can deal with your losses. Then also Part B was simply asking you to explain how the acquisition will affect the corporation tax liability in future years. Now, this is purely theory here, so this is bringing in technically groups from a corporation tax perspective and associated or unassociated companies. So what you have to then consider is what would be the treatment, what would be the impact, and it is requiring some explanation here. So like it says, if Online Limited purchases more than 50% in any company, the upper limit will be divided. So the upper limit is now split between these associated companies, and then if that is of course more than, so the augmented profits are larger than the upper limit, the company they would be large and they would have to then pay in installments. This would require you to explain and of course discuss. Dividends received from the connected companies can be ignored at this stage because the dividends are not of course taxed. Unconnected companies are what we're going to use to calculate the augmented profits. So looking at this question, there is lots and lots of information being given to you. What you have to do is just of course break it down and deal with each part separately, and then that will hopefully get you the right answer in the exam, or if not, it will get you the method marks on what you have calculated from your numbers there. Good luck in your exam, guys, and I hope you enjoyed this video.